So today we hear a lot about digitization, whereas SOCASH is going after a very traditional space, which is cash. They're disrupting the way cash is withdrawn.
A business model that's free for consumers, and at the same time also Singapore is a very small market, so from day one we were looking at Asia as a whole. So you're absolutely right. In any growing economy, unless there is an artificial pressure, cash in circulation will always grow proportional to the growth rate of the economy. So the narrative is opposite, because if your product is free, if it's universal and it actually works for the community, then the competitors obviously would want to kill that product.
The usual advice and narrative is that never start a business with your family, that sort of thing. But there are always examples where it's worked out in big ways, like yourself.
So the moment we brought in the demo application, we said that entire experience is going to be shifted to a mobile. That really clicked.
We changed our business so much that, I could remember people in our team asking me whether, I had gone crazy.
Hey everyone, today we have Hari and Rekha Sivan, co-founders of SOCASH. SOCASH is an interesting startup which was founded here in Singapore, which lets consumers withdraw cash from shops and restaurants and basically any merchants, turns every merchant into an ATM pretty much. They've partnered with some major banks in the region, raised capital from some of the biggest VCs here, and raised capital up to Series B, after which they sold to Nium, which is a global payment unicorn. And SOCASH is one of the fastest growing fintech platforms here in Asia. And it's a very different approach. So today we hear a lot about digitization, whereas SOCASH is going after a very traditional space, which is cash, they're disrupting the way cash is withdrawn, the ATM system, but they also have a digital side to their business. So we'll talk about both of them. A lot of interesting things about statistics about the amount of cash still in circulation in every economy and how big a cost that comes with. So we'll talk about that and their journeys along the way. Thank you, Hari and Rekha, for being here.
Thank you. Our pleasure.
Thanks, Prahlad. It's great to be here.
Yeah. So tell us how it all started. Both of you were in the banking world and the IT side. Hari with DBS and later Citi and later DBS, and Rekha as well. These banks were your clients with the IT services firms you're with. So tell us about what that backstory is and how you started, thinking about this idea and started working on it while working.
I think both of us, were, this is around 2016, 2017. We were tinkering with, with stuff, to find what's next in our respective careers. And it was actually Rekha who came up with the idea that we should be focusing on cash when the whole world was talking about e-wallets and, the next thing, right? And I think that made a lot of sense. So even in a advanced economy like Singapore, small place, there were different pain points. So banks had its own pain points around cash, which was fundamentally economics. The unit economics just doesn't work. ATMs are expensive. Cash processing is expensive. For consumers, the ubiquitous ATM queue, which at that time was, quite a pain point, was a key driver. And the merchants, simply because of the amount of cash they had to collect and process and then get into banks. So we came up with this. We had seen cash withdrawal from shops in US and in UK and in Australia, but it was, you have to buy something and then you can withdraw small amounts of money. So we saw the infrastructure in Singapore, with the fast payments, the digital payments. So you could avoid ATMs, you could avoid switches, and then come up with the person-to-person exchange of cash. So the original MVP was like, hey, our neighbors can be our ATM, and how can we make 5 million walking ATMs in Singapore, right? Like in our early pitch or early thought process was that. But then we figured out that the opportunity is much bigger. We were using cash as a mechanism of demand to bring consumers, merchants, and banks onto one platform. And then the whole thought process was, our seed round funding pitch was like, we are aggregating these, and then we would eventually become a bank or get acquired by a bank, because you are bringing all three parties onto one single tech platform and so on and so forth. So that was the genesis. Obviously, a lot of that stuff didn't really work according to the plan, and things evolved. But that was a starting point. Rekha, what do you think?
Yeah, absolutely. So I think it was not really a business idea when we initially started discussing. It was more like, a thought that came to our mind because we were also facing this day to day, or you would say at least once in a week, a routine where we used to go. We actually make a trip to the ATM, nearest ATM, to withdraw cash. And we also used to go down to the mom and pop shop, which is the uncle shop right down, for buying other things, the basic stuff, bread, milk, egg, and these stuff. So we always wondered, I mean, the small change, right, the $10 $20 note, which we need for our day-to-day stuff. I can relate to many things which I needed that small change to give to my helper or to my son, like a pocket money. So I used to wonder, just because of this thing, I need to make a trip to the nearest ATM, make a plan, or otherwise I have to make sure that Friday I withdraw money and then come home, from the MRT station and things like that. So I used to think, why can't both be achieved in the same shop? Just like I go down to get my stuff, why can't I buy cash, like a commodity? Just get cash from there. How can we make it? I wish it was like that. It was like that. Just a normal thought that came to our mind. And then obviously we started discussing, and like, it's not a bad idea because it was in like the concept was not, it may be new to Asia, I would say, or Southeast Asia, but it was there. And like Hari said, it was that associated with some item to be bought mandatorily from the shop. We actually wanted to take that out, that buying thing, because it could be a block for the customer, because we don't want to force a customer to buy anything to get cash. It had to be as simple as that. So that is how we started thinking, like a day-to-day, I would say, it's experience. And from there, we thought, when we started discussing more, and some of our mentors also encouraged us, this is a good thought that is in your mind. You should think more about it, convert to an idea, find an opportunity. Can you convert this to a business? And then from there, that's how it started. Yeah.
I think the tough one was to create a business model to make it free for consumers. So, purchase is a friction, but how do you make it a business model that's free for consumers? And at the same time, also, Singapore is a very small market. So from day one, we were looking at Asia as a whole, excluding China, Hong Kong, and Korea. So those were the stuff that eventually led the product design and so on and so forth.
Even during our vacations, for instance, we went few times to Tokyo, and during our vacations, and we saw that they use cash a lot. They are like a very forward country, developed country, and they were using cash everywhere. Simple things like stations, MRT stations, and all that. So obviously we didn't want to. This is a concept, of course, because we were in Singapore. We wanted to start here, and they supported us. But this had to grow to a larger geography, like Indonesia, India, or Japan, and where there's still a lot of cash usage, and the geography is so large that we can't have an efficient ATM network like how Singapore has, because small country, everything is pretty much well organized and designed. So this is definitely best suited for larger geographies, where obviously your ATM is it's a responsibility for the bank. Put a security person right outside, make sure the cash is safe, the customer is safe who's coming to withdraw cash, as against the shop, which is it's your friendly neighborhood shop. You can always walk. You don't have to fear getting a 500 rupee note or a whatever from the nearest shop. So that is how we thought that there is definitely a solution, that this, if we solve this, it will definitely help the common man, like including us, and then that's how we extended this idea further. Yeah.
One of the things you mentioned, Hari, in the past interviews you've done, is that the amount of cash in circulation in every economy or every developed economy is actually growing year on year. I was wondering if that's still the case, post-COVID, and why that's the case with all this talk about digitization. Why is it that that keeps growing?
So you're absolutely right. In any growing economy, unless there is an artificial pressure, cash in circulation will always grow proportional to the growth rate of the economy. So like if there is a clamp down, obviously it won't go, or if there's a COVID, it won't. But if, so it really grows at a similar rate to the growth in economy. So you can look at US, Europe, anywhere. The why part is, let me give you an example, is in majority of the economies, cash would be the primary transacting mechanism for, let's say, 60 to 85% of the consumption, right? And this variation, the 60 to 85 is a big number, the delta is big, and that is primarily whether, it depends on whether the economy is credit driven, like, does it work on debt? Like, or is it more of savings? For example, India would be like 95% cash or 90% cash. The denominator is still under question, but if you look at the number of transactions, not the volume, but the number of consumption, retail transaction, really 90%, let's say 85% cash. Now, why is it the case? Because cash is a very efficient product, and let me explain, the details. So in payment systems, the efficiency of a product depends on, of course, usage. Is there a learning curve to use? So obviously cash, nobody needs to learn how to use, right? The second is, what is the settlement time? So if you are using a card or, any of those systems, from a consumer perspective, okay, you have done a payment, but for the merchant to get money, it could be 2, 3, 4 days. And, this is a major issue. The third variable is, what is the cost? So cash is a free payment mechanism. So I pay a merchant, there is no transaction cost or a fee. I can send you some videos and all that stuff. It's a big debating point in many countries now. So US is actually coming up with the act, like what is the cost to the merchant to regulate it. India has already regulated it. And again, cash is a free payment mechanism. And last but not the least, once a transaction is completed in cash, there is no dispute. But if you are using a card, there are so much of dispute mechanism, chargebacks. So it actually works against the merchants, right? So if you look at these 4, 5, 6 variables, cash is a very efficient product. Now the question is, why is the narrative the opposite? Right. So the narrative is opposite, because if your product is free, if it's universal and it actually works for the community, then the competitors obviously would want to kill that product, right? It's like water and Pepsi or water and Coke. Water is universally available, but it's actually a threat to the carbonated sugary drinks, right? So the same is happening for low value payments. Like even wallets, they're very siloed. So for example, you can use, there is no interoperability. So you can have, your wallet topped up, but if the merchant is not accepting, or if you're in a different country, all sorts of complexities happen. So cash is a very efficient product. The demand, is actually changing. So during COVID, we also had this question, what's the longevity? But now that we have 6 months, of data, again, the cash usage and the demand is increasing. And, in fact, there are many places in US which says we only accept cash because the cost of alternatives is no longer there. So there is no more subsidization, right? So VC money has dried out and there is no more incentivization, subsidization. So the MDR is becoming a pain point for the merchants, and actually cash is actually rebounding, if not growing faster. So it's an efficient product, and it is a significant part of most economy. And that is what demonetization, did. Like in 2016, India removed large value currency, but at the same time, didn't put the low value into the market. And India is still having effects of that, because in that intervening 6 to 8 to, let's say, 12 months, a lot of industries actually shut down because there was no business happening. And India never recovered. The growth rate of India is now, like I think 4% or 3% or something. And one of the key challenges is that the small industry was wiped out. And so so cash is an efficient product. Cash is growing. If you look at the cash in circulation published by any regulator, you would see that. I think COVID would have created an aberration, but from a 10, 15-year trend, it is actually growing quite healthy.
And you mentioned MDR. Could you just share what that is and how
Yeah.
the system
So,
works?
it is one of those acronyms that nobody understands, and it is deliberately created. In simple terms, MDR is the cost that a merchant pays, when he or she accepts an electronic payment. So credit cards, debit cards, QR, all of them, that's a business model. So convenience for the consumer, cost for the merchant. It can be, let's say, less than 1% to let's say 3%, 4%, or like if you use PayPal on websites, let's say you're running an e-commerce company or a Stripe, you would see like, 3.2% plus 50 cents. But that
Yeah.
adds up to like 5%, right? So that's your cost. So it's a cost that business people only, like, normal consumers don't know, but it's quite painful for the merchants. And it is a model that has been perfected over last 20, 30 years. It's called a four-party model. And the sad part of that is consumers love rewards, and that is kind of driving the consumer behavior. But it is actually increasing the cost of business. And as businesses become competitive and there are significant supply chain issues and so on, the margins are getting compressed. So this becomes, so if you're running a business on, let's say, 7% margin, and if your cost of payment itself is like 5%, then it's pretty tough to keep your neck above the water, right? So and there has been responses, like India has capped the MDR, Australia has capped the MDR, like, which is the cost to the merchant, right? And then the whole business model collapses. So it is an interesting space to watch. I think US generally leads all these things, and US is actually legislating some of these controls, on dominant payment processors. And I think next couple of years would be interesting to watch.
Rekha, since you both are co-founders, can you tell us what it's like running a business together? Just because, the usual advice and narrative is that never start a business with your family, that sort of thing. But there are always examples where it's worked out in big ways, like yourself. So what do you think about that? And how did you both go about managing both work and family?
Yeah, I think it's an interesting question to answer. So it is, this has been our first work together, in the sense Hari has been working in banks, I've been working in banks, but we never worked together in the same team or anything. So of course we don't know even each other's style of working. So even we discovered how we work and how we manage things. So we found our space. At work we had our own, depending on what we were good at, right? We were taking those areas and managing things. I was very close to the product and team building and everything around product building, roadmap, and managing priorities and everything around the product. And Hari used to manage everything pretty much. So that was one thing. At home, we used to only discuss about SOCASH. I would say that everything changed for us because after my elder one was born, and he was like four and a half years old, and then suddenly SOCASH came, and entire focus was on SOCASH, and including my son, we like all the time discussing about SOCASH, this and that. The team, it was a small team, right? So we knew each other very well, and we built a great rapport, and for us that was very important. Like different companies have different reason for success and many things. So for us, the team, I think, played a very key role. Like our senior management staff, they were they contributed everything into when we come up with an idea on the table, brainstorming everything. So we were all in the same meeting, discussing, deliberating, and it was interesting actually. We used to completely forget husband, wife, and it came to work. And sometimes people used to guess, okay, my last name had Hari, so how come Hari? So they used to be very confused. I remember one conversation with a 7-Eleven colleague, because we had just gone live and we were testing that the last one at a location once they had done the POS integration, and they were like, how are you related to Hari? And they didn't know that. It was so, that is the interesting part. They didn't know the way we worked, the way we interacted. They interact with Hari separately, with me separately for tech and things like that. And we went live, and I was down there because I wanted to be there when the first transaction happens at the shop. So, and then they came to know that, oh, Harry is your husband, and they're like, we never knew it. So that is in a way interesting, because I like that way that people know us as what we are responsible for in the company than so and so's husband or so and so's wife. So we actually found our space, and we kind of balance it. It has been, I wouldn't say that it has been very smooth, and there has been learnings for us. We learned each other, the way we work, our temperament, how we approach ideas. We share, I mean, everything about how each any department within the company, how we can make things better. So I think there's been a lot of learnings, and no regrets. I mean, it has been fabulous, and I think it has given us the stepping stone for the what we can do next in our career. So great learnings. And
So
great
let's
time.
let's rewind back to those early days when you were building the initial product. I believe how Hari came into the picture was you were building it and you were approaching banks and just talking to boards which were typically elderly folks and much older guys and women. So tell us about that initial struggle in terms of getting banks to come on board, and how Hari came into that picture at that point in time.
Yeah, absolutely. So, how we thought about it is, of course, we had our meetings, right? To get the first meeting with the bank is not easy. I mean, that was tough. Once we get the meeting, and we just hope that it doesn't get canceled, because we are literally at that stage where we want that opportunity to talk to a CEO or somebody who's really the decision maker at the bank. And as you said, rightly said, they're really seniors in the industry, and they wouldn't have heard about us or our concept. So this was a time to pitch and convince them the 30 minutes that we would get. So we used to prepare a lot before our meetings, and me and another colleague, we used to go down to the cafeteria down the bank, whichever bank we had meeting that day, and just prepare our points. How do we use the best, make the best use of the 30 minutes? How do we explain? So it used to be quite a overwhelming thing, while preparing and being faced. But very interestingly, so like the panel sometimes used to have like many members, in a sense, those who are interested to hear us out, sometimes like a smaller group, but there used to be at least one or two members who really used to get the idea what we are trying to solve, and we then we would feel encouraged, at least we could make that make the idea clearer with these 30 minutes discussion. So it used to be very interesting those days. I used to be nervous as well to meet. I remember the initial DBS meeting, and really those who have been managing deposits and all these things for, like, I would say they were really seniors in the industry. And but the interesting thing is, since they knew about companies like young companies like us who are trying to use the fintech platform, the support from MAS, and to have to come up with solutions which can serve for this, like for instance ours, like it would have solved a bank's problem, it would have solved a merchant's problem and a common man's problem. So it was like a win-win, right? And they used to hear us out. So I remember that in the initial meetings, we went with a deck, explaining this, and then we figured out that maybe we should go with an app, a demo app, give it to them, like give 2 phones, because we wanted to show, okay, this is the customer side and this is the merchant side. And imagine, I'm the merchant, you're the customer, you want to, get cash from me. And how would that experience be? So the moment we brought in the demo application, we said that entire experience is going to be shifted to a mobile. That really clicked. And so I remember the encouragement that I received, right? Where that the best part of your solution is you have changed the way, cash withdrawal is going to happen. Like everybody, had apps for this, apps for that, payments, this. So that is the best part that you've done. The customer journey, you have touched the customer journey, and you've shifted in this whole concept. So I can go down. I was just joke, most of the men forget wallets, when they go to the shop, including Hari. So many times he's gone to the shop, forgets his wallet, then he comes back to take the wallet. So I used to give this example, that you just need, because everybody carries their phone. Nobody forgets their phone. Phone has become that integral part of human these days, because everything is in your phone. So why not withdraw cash using your phone, your app? that's everything, that has everything to get you, and it'll also show you the nearest shop where you need to walk into. So that is where people liked. And once I started giving them the apps, they try to play around. Okay, this is how it is. They used to give us feedback. Okay, this is good. So how are you going to do? Then they started getting into, okay, how would you call a bank? How do you do the payment bit? Because there is matching a customer versus a nearest shop, that is a supply demand thing. Then after that, how the journey is going to be. So that is how the interest came in, and they used to come back to us. Of course, it used to get another 15-20 days to get another meeting, or at least a month to get another meeting. But that is how the initial days were, until we got our first bank and we went live with the first bank. Yeah.
And how did you go about, like with any two-sided marketplace, it's always a challenge, right? The demand and supply side of it. So how did you guys approach, did you get banks on board first, or did you get a couple of merchants on board? And how did you attract both of them at the same time?
So anyway, the application can't work, with just banks on board or just only merchants on board. So it is a parallel track. So I would say everything is a parallel track. So we have to engage our sales team very actively to, use the same apps to explain to them. Because if they go and just talk, the merchant would just, hear, he's also busy, right? Because he has customers. So that helped. So explaining them hands-on with the app. So that was one track. Talking to banks, another set of people. I was involved more into talking to banks, or on the side where we could explain the end-to-end product. And we had anyway a test merchant created, so they would know, okay, this is how the experience is going to be. Because even the banks were very interested to know what their customer experience would be, because customer experience is a very important piece for the banks. So whether they would, because we ran in two models. One is banks could give us their APIs where we could debit the customer, okay, which means it is our app that will be downloaded by the bank's customer. Okay, so there the discussion goes into a different track, because we need to understand what banks have in terms of APIs, what they can expose to fintech companies like us. So we go into that level, that track of discussion. The other side is banks themselves are interested to have us on board. So we will, it's like it's their application, but it is powered by SOCASH. So we had figured out that, we must quickly start this track. So since our technology team and the founding team was already in, so we discussed with them and told them to come up with APIs, because that is another track. We would start talking to banks, and those who have time and those who are particular about their customer experience and how they want it to be done. So we used to give our APIs to them. So two tracks with the banks itself, whether they're going to use our APIs or we are going to use their APIs. And of course, the sales team used to be actively looking at. When we had the first bank out, we had ensured that we have the retail network, which we could share with them. It's a list. These are the locations, these are the shops. That their customers will be going to, because obviously banks want to know where their customers are going to. They would have a look at that before giving us a go ahead and things like that. So it is a parallel track, but when it comes to the retail side, we learned very quickly that walking across in the hot sun and signing up merchant by merchant is going to be tough, because our sales team used to give us that feedback. It is tough, talking, explaining to every merchant, and they're not going to tell you yes in the first time. You need to visit them, there's to be follow-up and things like that. So then we realized that we need to talk to like a retail chain, because they have the point of sale. They would do a single implementation. We had our APIs for the merchant side also. So once they do that integration and they roll out, it's like a code, right, that they can install in all the point of sale. That saves us in a way that in one go we can get X number of locations, hundreds of locations or thousands of locations. So that way the numbers, like we can say we were available more. Like for instance, when 7-Eleven came on board, right? So, and if 7-Eleven has a sticker of SOCASH, alongside banks, etc., outside their door or at their counter, then it becomes good for us, because we are everywhere. It helps us even in our conversation with the other retailers. So that's how we approach and we learn when it comes to having more retailers on board.
Just to add on, I think Prahlad, your question was on the marketplace, right? So uh, I think the strategy is always create the supply first. So you create the, whatever is, if you're running a double-sided marketplace or a multi-sided marketplace,
Yeah.
it's always supply that is easier to create. Demand, is more, it comes later, because you, like, if you create demand and then there is no supply, then you lose a lot of time and effort. So it's always wiser to create supply, even if it's like idle supply, and then work on the demand. And in our case, retailers are faster to decide, and the business model is in their favor, because whatever they do on SOCASH, we promise them revenue and recurring customers. So whether it's cash withdrawal, cash deposit, digital goods, as our product roadmap evolved, we were very focused to make sure that the merchant always makes money.
Money.
So which is quite opposite, right? Like in payments, it's a cost, right? So if there are so many payment options, it's a cost. Whereas when we went and told them that, look, you're going to make money, it's a revenue, and you can offset your cost, or you can make a profit, then it's an easier conversation. So we were stuck with like 30,000 merchants across Southeast Asia, during COVID, idle merchants, right? Because people were staying indoors. And, so those were the dynamics that we kind of navigated and pivoted and changed our business models, etc. So the supply actually, our focus on creating supply actually worked in our favor, throughout our journey.
Okay, about funding, tell us about when's the first time you raised capital from an external investor, and what's the funding journey been like for you? How is it different specific to the fintech space you're operating in, just because of the regulatory environment? And what tips you have for founders who are trying to raise capital?
Rekha, should I go?
Yeah.
So I think the funding has also been a very learning process for us, because both of us came from corporates, and we really didn't, have a view on how that will work out. So earlier, initially, we put our money. Then, this is probably like, the tinkering phase, right? Like building us to 2016, 2017. We raised some money from our family, and then we, of course, like the money actually runs out very fast, because early phase in our business model was like, okay, it'll take 3 years of investments to build the network, the team, and so on and so forth. So our product was iterating very fast. We had a very good technology team, but to get the banks on board and to get that first dollar revenue, and then, get that revenue flywheel going, it's a challenge. So we always have been very conservative, and we always were lucky to raise funds at the last month. Like, we would have like 3 months of runway, and, somehow a round would happen. So in that sense, we were quite lucky. So we had our personal money, of course. We got the MAS grant, which gave us a lot of credibility. But, to reach that itself, you have to put significant amount of capital, right? So you have to have a platform that the banks and regulators, are recommending to the industry. So we raised a Series A, I think in 2018. And then we raised our Series B in 2019. So Series A was led by, of course, Vertex Ventures, and a couple of other VCs, in Singapore.
K3.
K3 and so on and so forth. And then Series B, we expanded overseas. So it was led by Glory from Japan, and Standard Chartered, and a couple of other investors, and so then it became like, okay, we were planning for an 18-month operating cost, and then around, somewhere in the 9th month, we would start raising capital. And, it became really like a focused effort, because as you raise, so you need to have growth. And so it's a very disciplined process. And, we never had, so we had luck in timing, but we never had that luck of big rounds suddenly materializing and so on and so forth. So, it was really hard work. The other question that you had was, hey, what do you have advice for founders? Like I would say that, right now, the times are so complicated. Like we are not qualified to give advice. So but wherever you can get money, just take it, right? So uncertainty, there is enough when you're building your first couple of years at 0 to 1, 1 to 2, 2 to 3. There are so many challenges, right? So, and money shouldn't be, you shouldn't be too worried about, oh, valuation this and valuation that, because that can, you can sort it out if you're successful. But if you need capital, and if you're getting capital, then take it. Don't waste time on negotiating, because earlier days you have zero negotiating power, frankly, unless you are an exceptionally good exception, right? So if you're, especially during these times, just make sure that you have enough runway, and you're not spending crazy amounts on frivolous stuff, because credibility, early days would be like, what is your product? Is your team good? Do you have credibility in front of investors? So you want to protect that at any cost. So if during due diligence anyone finds that you're taken a business class flight or a first class flight for whatever reason, right? So you may have to explain it, and that is not a conversation that I would like to have. I would rather get the term sheet conversation than these kind of conversations.
Tell us about what was the pivot like, because your business was entirely but cash withdrawals, and then the lockdown happened since COVID, and so you started an entirely new offering in terms of your digital services. So how did you go about that pivot?
So we were lucky in the sense, 2019 we had enough capital, and we had expanded out to Malaysia, Indonesia, and we were working on Japan. It was like crazy expansion time. So Malaysia, we had got the regulatory approval. Indonesia, we had got the regulatory approval in some form, and then Japan was work in progress. And then that is when this whole COVID lockdown happened. So you're right, a significant portion of transactions was still ATM, and that was quite a lucrative business. But because it was transaction driven, our revenues kind of fell. We were kind of following the optimistic part to say, okay, it's 2 months lockdown, 3 months lockdown, but then it became like 12 months lockdown. So our transaction revenue evaporated, but we were still clocking a SaaS revenue from banks. But our network was also like merchants was also having a tough time. A lot of them were getting closed. So we were fighting fires on all fronts. And then we realized that we wanted to reduce our dependence on the cash part of the business. So we launched, an acquiring business, so which would be a Pay Now and, the Chris in Indonesia and so on and so forth. It didn't really work out that well. But then we again added a cash in business. So wallet top-ups for buying, content, games, digital goods. And that kind of zoomed during the second year of COVID. So, and then, we had remittance. So we opened up our network for remittances. For example, let's say maids in Singapore have to send money back to Indonesia, and they couldn't go to, like Orchard and all that stuff. So they, you could go down to a nearby shop, and we had this great partnership with Singtel Dash, and that brought up the other companies. So we kind of, the 2 years were like, we changed our business so much that, like I could remember people in our team, asking me whether, I'd gone crazy, but I knew the capability. I knew the difficulty in running the payroll and so on and so forth. So we changed so many times that eventually it became a diverse set of tools that the retailer could do, withdrawal, deposits for banking, then content, gaming, remittances, or the value-added services. So in general, once the lockdowns got removed, he was seeing substantial benefit. And people had also become familiar with the neighborhood shop. Hey, the shop can do all this stuff. And then our revenue actually started zooming up. And that also, eventually led to inquiries related to M&As and so on and so forth.
I recently had a conversation with Prantik Mazumdar, the founder of Happy Marketer, who sold to Dentsu Group, and he was sharing how they never thought about selling the company as they were building it, he and his partners. And when they were first approached, it was, they had never thought about it. And so they went about, like carefully evaluating all their options and looking for, other offers. And so what was it like for you when, have you ever thought about, you mentioned that you were, planning to sell to banks. That was the original pitch, but how did the whole conversation with Nium start, and how did you both go about processing what it would be like to get acquired at the stage you were at?
I think it was very complex stuff. Or the first decision is like, hey, do you want to keep going, raise capital, or like if a good acquisition comes, and me and Rekha have had this philosophical debate forever. And I think Rekha can also probably share more because she comes from she probably voices out the team sentiments. So do you want to share like how the team was responding to these debates? And then I can go into the corporate side of stuff or the financial side of stuff.
Yeah, so I think the team, frankly, they were not very comfortable, like.
No, but the concept wise, not a specific transaction, but whether to sell or not to sell.
Yeah, so I think having, if there was a chance, I think they didn't want that company to be sold, right? But for what everybody thought, and at least the senior management, that this company has to grow and do stuff that it is supposed to do, because there were factors like timing that affected us. Like classic example is COVID lockdown came in when we wanted to do the cross-border thing. We couldn't launch to the customers, and it was literally ready for customer launch. So the team felt that everything had been done on time, multiple integrations. It was one of the pieces which had maximum integrations, complex, and they did feel that we were there was a timing thing that really affected us. And they were with that sentiment of to want to launch this, bring this out to the customers, and many things that how to scale from where we are to the next level. When you go outside Asia, or those aspirations were definitely there with the team. And whatever opportunity that would make sense for the betterment of the company was definitely taken in a very positive sense by the team, to go to the next level, right? Because we wanted to really go next, and we wanted to see what is the right opportunity for us as a team to let SOCASH go further and grow more. So I think everybody shared that sentiment for the goodness of the company, for the betterment of the company. So I would say that's how we all thought, the whole team, the senior management staff, everybody. Yeah.
So now, I think actually your question is quite good. So when we were looking at raising capital, so we had good interest, but the question in our minds was like, if we get that $8-10 million, because that is what we were raising, like how would it work out from a COVID perspective? So, and this is like, you have to consider 2021, August, September. And our board actually pushed this idea that, hey, why don't you look for options beyond that? And we actually ran a process, with a boutique investment firm. And that was actually quite painful from a founder perspective for both of us, because not only are you running the company, but now you're running a separate process, and you can't reveal too much because the word gets out, and then you probably will have a team exodus, right? We were having a pretty good team, and I was pretty aggressive about like recruiters, not like nobody should touch my team, and I even have had serious conversations with some nasty recruiters and so on and so on. So that was a big concern, but eventually we landed to this point that look, we don't know, given the uncertainties, we don't know whether this 10 million round will actually get us across the bridge. And that is when we seriously went into a short list of potential transactions based on the interest we received. And once you define that mentality, at least in our case, was like, we don't want to keep confusion on the table. So you choose a path. All decisions are wrong in hindsight, but you choose a path, and then and that is where the board and the board of directors and the advisors actually play a role. We had this additional complexity that not many people are aware, but all the VC funds have a longevity and they have a timeline horizon, right? So it could be 5 years, 7 years, and so on and so on. So we had one investor who I felt was a little bit uncertain. So the first objective was to get him an exit, and I can flip him out, and and get him out and find somebody in. So that did not exactly work out, and so we went through all these trials and tribulations, and finally, we had two shortlisted offers, and we chose, the Nium offer, which was, we felt that the business was complementary because Nium already had an issuing business, so they issue cards, they were cross-border business, and ours was fundamentally a alternate payment network. It was on the acquiring side. We had the merchant network and so on and so forth. And Nium was going into the banking as a service, travel. So we felt that the product is complementary. Both of us felt, and that is how we went about the transaction.
Just going back to the fintech space in general, in terms of how regulated it is, how did you manage that, especially in the early days? Did you need some external legal help and advisory, and how did you go about, because it's every market has its different regulatory environment, right? So how did you go about that process?
So I used to handle that myself in the early days till we actually got a compliance officer, a compliance team, and so on and so forth. And actually, me and our gentleman, our COO called Galvin. So those were pretty exciting times. But because most of us came from banks, we were quite bank friendly, and that we were not out to disrupt banks or banking, or we never made those crazy, outrageous statements even for marketing, right? So we always were on the side of the bank, and the idea was to make banking system more efficient, and while the hidden idea was to aggregate the three parties and then eventually build up a bigger bank. But from a product perspective, we were on the side of the bank. So we really got massive help from MAS in the early days on what would be regulatorily accepted. And I think they were probably guiding us. They knew that we could be quite a disruptive, crazy thing, but they put in, they gave us the grant, but at the same time they also had some level of control and advisory for us during the early days, which set our trajectory. And that in turn made us like ASEAN friendly, because there is some level of collaboration, like with Malaysia, Indonesia, Singapore. So immediate geography was kind of okay. I think it's really good that we actively sourced our licenses, rather than staying out of regulation. So we had either remittance license or acquiring license, or or some kind of paper which made us regulated, and that helped us in our sales, because otherwise you cannot sell to the banks. So our early focus on getting regulated actually helped our business. We did not use any advisory services till we had money. All the advisors and lawyers are expensive. So, and we did it ourselves, and that kind of gave us probably some level of credibility in front of regulators, because like typically and because we come from banks, a bank officer speaking to a regulator is actually quite a tense meeting. Whereas if I go in, I'm wearing a t-shirt, I just go in like I can actually calm down the temperatures and position it as an innovation, and probably get I remember this conversation with Japan FSA, and it was like 20 people, and I was talking and I had a translator. And then the regulator, the head of the regulatory committee, actually asked the translator to shut down, shut up, and asked me to go extempore. So I think as a founder, that you have a lot of credibility, in front of regulators, and I think startups, fintech should actually use that.
Okay, so tell us, we went through the whole journey from from starting up to growing, and how you went about the exit process. Tell us what's next for both of you.
I think I'll go first, and then I'll hand over Rekha, because Rekha has a lot of exciting stuff to speak. So I have some downtime. I have a non-compete, non-solicit stuff. That takes me to next year. So till then, it's like keep it chill and with the family. But Rekha has started and launched a new business, and I think she can talk more on that.
Yeah, so I think I'm going to definitely take the experience of having developed a great roadmap for SOCASH. So I'm kind of comfortable with the product and handling the product side. So I think with that experience, and of course team building and many things that has been wonderful at SOCASH, I'm going to use that, and I've started on a new venture, which is this is a SaaS product for water utility companies, and we are currently focused in the US market. So it's in the design inception phase right now, and it's quite exciting. I would say temporarily taking a break from the fintech, but definitely ideas, innovation, continue on that path. And yeah, everything it's forming a new team, and having a conversation with the clients, totally different space, I would say, different sector, but it's quite exciting at this point, and I'm enjoying that space right now. Yeah.
Awesome.
So we have called it Aqua.
Yeah.
I mean, the website is still being built. Hopefully we will announce it a couple of weeks or months later. So no time pressure as of now, but it is. I mean, thesis wise, I'm behind it, right? So I think the
Full support.
Yeah.
Full support. Yeah. I think it's fun and exciting, because I can think about the initial SOCASH days when everything was on paper, drawings, a lot of notes. It's that phase. It's quite exciting because you're again building something from the scratch, which is the best part of building something new. So
and I think we are also doing good for the world, because it optimizes water. It brings efficiency into a lot of inefficient spaces in water industry.
Just like when we started SOCASH, we knew that there's a lot of that there's huge I mean, probably nobody spent or invested time about how to make this cash circulation more efficient. So this is something like that. We're again trying to solve the efficiency part. We're trying to bring the best brains together to solve this for the water industry. Yeah.
From one regulated space to perhaps an even more regulated space. This time with the credibility of being successful founders. So wish you both all the best, and thank you for being here.
Thank you, Prahlad, and wish you all the best too.
Yep.
Thank you.
Nice.
Thank you. Bye-bye.
Bye-bye.